Now, children, now we are starting chapter number 6, capital and revenue, expenditure and income. So, in this chapter, as per the syllabus, we have to uh, complete the meaning of capital expenditure and revenue expenditure. Capital expenditure and revenue expenditure meaning and their differences, and capital receipt and revenue receipt with meaning and their differences. And next is we have a deferred revenue expenditure, meaning and examples of this. So first of all, let us do the meaning of what do you mean by capital expenditure. So capital expenditure means expenditure, those expenditure, the benefit of those expenditure which can be taken for more than one current year. That means we can once we incurred once we spend the money in this capital expenditure, the benefit from this expenditure we enjoy it for more than one accounting year, more than one financial year. So which is written here as capital expenditure means the expenditure, the benefit of which is not exhausted within the current year. That means not in only in 1 year, current year, but it's enjoyed over a long period of time. That means the benefit of this capital expenditure is enjoyed for a long period of time, not only for one current year, but it may be 2 years, 3 years, 4 years. So for example, so if we buy a car machine, a car is a machine. For example, let's take example a car. We paid 5 lakhs rupees. Buying a car is a capital expenditure for a business from the point of view of business, because once we spend money on a car, the car can be used by the business organization for a more than a year. It may be 10, 15 years. So many years the car can be used. If a business firm purchase, suppose one furniture, a furniture is purchased. So furniture purchase is a capital expenditure, because you are spending money on furniture, but that furniture will give you benefit not only for 1 year. It will give you benefit for many years. So this type of expenditure which we spend in 1 year, but the benefit of that expenditure can be enjoyed for many years. So this type of expenditure is called as a capital expenditure. So capital expenditures are the results of acquisition of permanent asset such as land and building, plant and machinery, furniture and fixtures. If you spend money on these things, it is a capital expenditure, because if you buy land and building, that land and building is used for that will give you benefit for many years. If you buy plant and machinery for the business, the plant and machinery can be used in the business for many years. If you buy a furniture for the office use in the business, that furniture gives you the benefit for many years. So this type of expenditure is called as a capital expenditure. So these assets are intended to be used in the business for earning revenue over several years. These assets are used in the business. You are buying the furniture. This furniture are the furnitures which you are buying is a capital expenditure, because that furniture is used in the business for many years. So that furniture will give a comfortable to the business. That furniture are used in the business so that the business can earn a profit. Plant and machinery purchase. This machinery purchase is a capital expenditure, because the plant and machinery is used in the business for the production for many years. This plant and machinery is used for many years for production purpose, and that so that the production purpose it is used, and whatever goods are produced, it is sold in the market for earning the profit. That means that by using the machine, the output of that machine product are sold in the market for earning the profit. So in this way, the firm earns the profit by using the machine. The firm earn the profit by using the furniture. The firm earn the machine by profit by using that building, factory building. So in this way, this type of expenditure are called as an capital expenditure. So you are spending in 1 year. Suppose for this is 2020. You are constructing one factory building. We are buying the machinery. In that factory, you have constructed the factory, and you have purchased the machine. You have purchased the furniture in the year 2020. And now with that, in that factory, you are with the help of the machine. The furniture is used in the office for it is used in the office for sitting. So in this way, these assets are utilized in the business. Factory building machinery are utilized in the business for production, and that with the help of this production, the firm earns so many profits. So this helps the business to run smoothly. These are the assets. Purchase of all assets are the capital expenditure, and the benefits is enjoyed for many years. This type of expenditure are called as capital expenditure. Capital expenditure is result in the acquisition of permanent assets such as machinery, land and building, plant and machinery, furniture, etc. These assets are used in the business for earning the revenue over several years. So this capital expenditure includes expenses incurring for making the asset ready. So to use the asset ready, for example, we are paying the wages for erecting the plant and machinery. This is also a capital expenditure. So cost of making the platform, machinery. So all these are the capital expenditure. So expenditure incurred for the extension or improvement of the fixed assets is also capital expenditure. Such expenditure example are overhauling of second-hand machinery it helps to increase the profit of the business. So these are the capital expenditure. Capital expenditure also include the expenses of incurring the acquire the right to carry on business, cost of license, legal fees, brokerage paid on the acquire of assets. All these are the capital expenditure. And these expenditure are incurred once only. Every time it will not incur. They take place once only. Suppose buy the machinery, buy the land and furnitures. So you pay the brokerage charge for the purchase of assets. So wages paid for installation of machinery. All these are the capital expenditure, and they incur once only. So in another we have a revenue expenditure. So capital expenditure is finished. A revenue expenditure are those expenditure which is exhausted within the current year. That means that is utilized in the current year. It will not utilize, the expenditure will not give you benefit in the next year. Such expenditure is a recurring. Such expenditure is of recurring nature and does not result in the acquisition of permanent assets. So this will not result in buying the assets. So these revenue expenditure are incurred for meeting day-to-day requirement of business. These are the expenditure which are paid for day-to-day expenses of the business. The revenue expenditure does not add the earning capacity. It will not add any kind of benefits for earning capacity. So all the expenditure incurred day-to-day administration of the firm, and the effect of which is completed exhausted within the current accounting period are called revenue expenditure. So this expenditure, once it incurred, that you be utilized in one accounting year. For example, you are paying the salary for one salary. If you pay the salary for the staff, it will pay for a particular month only. Next month again you have to pay. That's why it is a recurring in nature. It is a recurring. Every time you have to pay salary. If you will not pay salary, the employees will not work. So this is recurring in every time you have to. Suppose, for example, purchase of raw material. Once you buy the raw material purchase is a revenue expenditure, because you buy the raw material, you make the goods, again you have to buy raw material next. Pay the wages to the workers, they will work, again next day again you have to pay wages. Now next day again, if you are making them to work, again you have to pay wages. Electricity bill, every month you have to pay. Telephone bill, every month you have to pay. This is a revenue expenditure, but revenue expenditure. Electricity bill pay, every month you have to pay. Telephone bill, every month you have to pay. Rent paid Every month you have to pay rent of the factory, office rent, business premises rent. So this expenditure are incurred every month. It's not like that one month you pay once you pay the rent, it will be forever. Not like that. But whereas capital expenditure, once you buy the furniture, it is forever. Furniture that will give you benefit for many years, like furniture purchase. Machinery, if you buy the machinery, that machinery is a capital expenditure, and if you spend money on this machinery, that machinery will give you benefit for many years. But if you pay salary to the workers, that salary paid to the workers is only for once. So this is the revenue expenditure. So now so this is a revenue expenditure. The revenue expenditures are those expenditure the benefit of which can be taken only within that accounting period only. The expenses, this type of expenses are day-to-day expenses for running the business. The expenses, like these expenses do not yield any benefit beyond one accounting year. That means whatever expenditure we are doing in this revenue expenditure, their benefit is enjoyed within one accounting year only. The benefits cannot be enjoyed in the next year. So this type, for example, as I said, rent paid, salary paid, telephone bill paid, electricity bill paid. So all these type of expenditures, the benefit is only for one accounting year. So the benefit will not be enjoyed in the next accounting year. This type of expenditures are called as revenue expenditure. So now next topic is our distinction between the capital expenditure and the revenue expenditure. So capital expenditure are used for acquisition of or the erection of fixed assets that is used in the business, whereas on the other hand, revenue expenditure are used for the day-to-day expenditure for the business. So capital expenditure is for purchasing the asset that or erection of the fixed assets. It is used for expenditure used for the assets, but whereas revenue expenditure are for day-to-day expenditure of the business. Whereas next is earning capacity. The amount spent on the capital expenditures, the benefit can be enjoyed in the next year also. It will increase the earning capacity. Capital expenditure will increase the earning capacity of the business, whereas the revenue expenditure will not increase the earning capacity, but it will help in the day-to-day expenditure for smooth running of the farm only. But it will not, revenue expenditure will not increase the earning capacity, whereas capital expenditure will increase the earning capacity. Period of benefit, the capital expenditure, the benefit can be taken in the more than one accounting year. The capital expenditure benefit can be taken, enjoyed for more than one accounting year, whereas the revenue expenditure, the benefit can be enjoyed within one accounting year, within that current accounting period only. And that is only for the year, in that year, in the year which it has been spent. The benefit will not be enjoyed in the next year, next accounting year. So that is revenue expenditure. But capital expenditure, the benefit can be enjoyed for more than one accounting year. But whereas the revenue expenditure, the benefit can be enjoyed only within that accounting period only. So if you see from the accounting point of view, capital expenditure is shown in the balance sheet, whereas revenue expenditure is shown in the trading account or profit and loss account. So if you see the nature, capital expenditure is non-recurring expense. Non-recurring means once only. Once only, like every business firm will buy the machinery once. It will not buy machinery again and again. Furniture is a capital expenditure because furniture we purchase once only. We do not buy furniture each and every month, each and every day. We do not buy furniture. Building we do not construct every month. We do not construct building for business. Once building is constructed, it is for many years, for many years. So, but whereas revenue expenditure, we have to increase recurring in it. Every month we have to pay salary. Every day we have to pay wages to the workers. Every month we have to pay rent. Every month we have to pay electricity bill. Every month we have to pay telephone bill. Every month we have to pay the carriages, advertisement expenses. All these are recurring. Every month we are buying the stationery. We are using the stationeries again and again. These all our expenditure are recurring in nature. So this is a recurring in nature. This is the nature of the revenue expenditure. They are recurring in nature, but whereas capital expenditure is non-recurring in nature. So this is about the capital expenditure and the revenue expenditure. If you see the now next, if you see next the capital receipt. Capital receipt are so those receipts capital receipts capital expenditure revenue expenditures
Going